My name is Ed Merriman, and for going on 15 years, I've proudly been serving Maryland residents with their home financing needs. This week, we're going to continue looking at one of the major components of getting a mortgage, your credit score. Last week, we looked into the three major factors that go into making up your credit score and how to boost your score most effectively so you can be ready for your mortgage before you apply. This will allow you to take advantage of those low mortgage interest rates that you see offered. If you missed it, go back and take a look. It's good. On the side, just as I stressed last week, there is a very large gap between just qualifying for a loan and getting the best interest rate. To get the best offering, you need to be prepared before you apply for your home loan. The difference can run into the hundreds of thousands of dollars in interest over the course of your standard 30-year mortgage. This week, we're going to take a look at how you earn a credit score. Surprisingly, some people do not have credit scores when they go to the three major reporting bureaus. So what gives an individual a credit score? The answer is Tradelines. So what's a trade line? Investopedia defines a trade line as a record of activity for any type of credit extended to a borrower. The rest of the definition is where there can be some issue. It finishes with and is reported to the credit reporting agency. So, it's possible, especially for a young adult or a person who is new to living in the United States, to be paying bills in a timely manner and not have a credit score. Many creditors that we pay bills to on a regular monthly basis do not report to the credit agencies. For instance, cell phone companies, utility companies, this includes gas, electric, and water, your cable or internet provider, your insurance company, credit unions, school tuition, child care, your landlord, and rental payments. As you can see, you can be making regular, timely payments to a substantial amount of creditors and not be receiving the credit in the form of a high FICO score for your timely payments and performance. If you do not have a credit score, when you go to apply for a mortgage, this will be a hurdle for you. And while it can be overcome, it will take considerable effort and you will not have access to the best interest rates. For traditional, conventional loans, those are the ones with the best interest rates. You as a borrower are required by Fannie Mae to have one credit score from one of the reporting agencies to fall under the traditional credit guidelines. If you do not, you will fall under the non-traditional credit guidelines, and you will need to establish a credit history. A trade line for mortgage purposes is a creditor that has been making regular monthly payments to and reporting for at least 12 months. What mortgage lenders really want to see is established trade lines, and they will want at least 3 of these that have been in good standing for you to be a credit risk. The difference between established trade lines and a regular trade line is time. An established trade line shows a 24-month or 2-year history instead of just one. So for younger people or people that are new to the United States, it is important to establish good credit so that when it comes time to purchase a home, you will be ready. With my older daughter, for instance, I had her go get a credit card with a very low balance limit on it and start to use it. For me as a parent, this is a great twofold teaching tool for her. Number one, it is starting to establish credit for her early. So as she is saving for the big ticket items, she will also have a solid credit history if she needs to apply for a loan. Number two, this teaches her how to use credit responsibly. She can't get into too much trouble with the low credit limit. And at the same time, it teaches her the discipline of paying off her card each month while earning some of the perks her creditor offers her for using their services. This has been a real win-win for her as she is becoming more independent. So let's recap. Credit history that gives you a credit rating or FICO score is established through creditors reporting your timely monthly payments to the 3 credit reporting bureaus. These reportings make up trade lines for each creditor. The trade lines track your payments, and from these payments, the agencies rate you on a numeric scale as to whether you're a good credit risk. The lower the credit score, the more risky you are as a borrower. Where this comes into getting a mortgage, what is ideal is to have at least 3 seasoned trade lines. That is lines with a history of 24 months or longer. This takes time and is important to start building now so you are ready for the future. I hope you enjoyed this video. And if you are considering a mortgage and want to make sure that your credit is established and ready for a mortgage, please contact me. I'll be happy to serve you. My contact information is on the screen. Until next week, this is Ed Merriman, your Maryland mortgage man, wishing you the best. See you soon. Bye-bye.